going to Mozambique to go and discuss leadership. Isn't that interesting?
There's a big crowd there as well. I mean, it's a nice, impressive crowd as well. So, and a mentorship, what's it, a mentorship?
Well, it is. I think that's where Alison Gregg has really hit it on the button. She's put this whole thing together, and the mentors, which will be business leaders, take along mentees. And you have these two streams that will be discussing issues, including a mentee that David will be bringing on. But, Mr. Shapiro, as far as the stock markets are concerned, no mentorship required for you, the raging bull.
Came back a little, 0.4%. But, Alec, what was interesting is that resources were very strong. I'm not quite sure why America closed or is trading up, but there was a sharp rebound in American markets on the back, purportedly, of better than expected corporate results. I'm not going to go into them because I didn't quite understand why, but the markets were up. And that seemed to have an uplifting effect on our resources. Platinum gold shares were very strong. BHP Billiton surprised on the upside. Its results were down, but I think it was better than analysts were expecting. That closed up. So we had a strong resource market, but domestically, I think financials and industrials coming under pressure. And I think that's the retail sales numbers that we saw today and manufacturing number that we saw yesterday. I think worrying.
One of the biggest losers was Tongaat Hewlett, which was down 15% today. We're going to be talking to Peter Starder in just a moment about that. But I guess if you were to look at the headline news, and that has to be BHP Billiton, the second biggest stock listed by value terms on the JSE. David, you say it's surprised on the upside. Surely the vulnerability of those results, and if you break them out, iron ore and coking coal, both of which go into the Chinese steel sector, made up for 60% of their profits this year. That's a very vulnerable position to be in.
It is, if the Chinese stop producing.
Well, if they stop buying to the degree that they have been, and they've been rebuilding inventories. Even BHP says that.
It was interesting to listen to Marius Kloppers. What he said is that the restocking is over. From now on, it will reflect demand conditions. But I think what the market's responding to is perhaps a turnaround in the West. In other words, that we'll start to see signs of picking up there.
Can you buy that?
He was cautious. You know, he's a very cautious man. And listening to him early this morning, I was a bit hesitant. I thought the market would come back a bit, but it didn't. It actually responded fairly positively. So it's difficult to understand, to reconcile Kloppers with the way that the market reacted.
Let's understand this. In the past financial year, BHP Billiton unquestionably has relied on restocking by China and the Chinese steel sector. We know the Chinese are very cross with what they've been paying for iron ore, and iron ore makes up a third of BHP's results. So put that one side. Is the view then coming out of BHP that the Western world is going to recover and start buying more of their commodities, and as a consequence of that, keep prices or push prices up?
Yeah. There is a hope that that will happen. And I say a hope because I think without that, Alec, we've got no chance. In other words, I don't fall for the story, or I believe the story, even though Jim O'Neill from Goldman Sachs, very, very bullish, and is a person worth reading, very, very bullish on emerging markets.
The West is full of services. It's not full of manufacturing. That's why I can't understand this. Manufacturing's all gone to China.
I know, but you've got very heavy infrastructural programs that have to take place, that will take place, that could create it. So it's, Alec, you know, I know we act bullish here, or I act bullish, but there's still a lot of nervousness, there's a lot of caution out there, and one's got to play this almost on a day-to-day basis. So I say today, I thought our market would come back quite a lot on the back of yesterday's pullback and a bit of profit taking, but I must say I was very surprised at the strength in resource shares.
But we do play it nicely on this program. Yes. You're the bull and I'm the bear. So.
But I tell you, there's one thing that you picked out yesterday, and that came through today. And that was talking to Mike Upton from Group 5. And, you know, during the discussions, there's, I think what's a concern now, and that came through in the construction shares today, is a worry that the South African government's going to have to go out and borrow more. And that's not going to be easy. And therefore, a lot of those projects might be delayed. So against that, we saw construction shares coming back today.
But surely, to goodness, they have to be. If Dubai is able to cancel projects, South Africa's government must be able to at least postpone them.
Well, I think that they'll delay them, they'll stretch them. They might have approved them, but when where they're going to find the money? And I think that's you know, if you look at our retail sales, if you look at our manufacturing, revenues are going to be down, and could be down a lot more than Pravin Gordhan is even anticipating. And I think that's going to put strain on the government. So that's being, I think those are the issues reflecting in the stock market ourselves, the domestic stock market.